Tuesday, May 12th, 2020, Monaco 64, home of alternative economics and contrarian views. The title of the video today is the UK Treasury's trial run for the current economic black swan. Many of you might know about Grant Williams from Rio Vision. I'm not sure if he's still there, but sometimes he says things that make you go, And this is one of those times for me. I've been thinking about this for the last week or so, maybe a little longer, and kind of joined the dots. I even made a video about this back in January this year. It was January 11th. There's a story that I'm going to bring up, and I'm glad I saved it, this story, in my computer. And it's from the FT. It's from January 7th. And the thing about what I'm going to talk about is about following the money. When we watch detective stories, crime shows, when someone gets murdered, for example, Agatha Christie mystery, the detectives always look at the people who were going to benefit from the death of the person, from the murder, financially. So I think it's important to always follow the money. And even in the current environment that we're in, following the money, I think, is very important. And in this case, at the time, I made a video about this. And I warned the viewers that this was a bad sign, that this meant that the UK Treasury and Boris Johnson's government, which was supposed to be a conservative government, of course, was going to spend like a drunken sailor, and that you needed to be in precious metals, not in dollars, because the dollar and the US, they're going to do the same thing. And in the beginning of the year, the price of gold was below 1,200 pounds. Now we're almost at 1,400 pounds. So it has proven right, my warnings. I'm not trying to say I told you so, but I'm just showing it to you. So let's go to the story that's kind of rang alarm bells in my head about the whole crisis this year. And try to keep away from talking about all the theories that we have. And I know about all the things that had been going on late last year, like in New York, Event 201. I'll just mention that. But this is the story here from the FT, January 7th, 2020. Borrowing bump sets up UK as test case for bond market. Mild market reaction suggests investors are resilient to extra fiscal spending. Yeah, at the time I just thought, the economy is slowing down. The Chinese economy had slowed down. End of the year, the German economy, Italian economy, they're all slowing down. It wasn't a surprise. But this was a surprise, because you need to understand that countries like the UK and the Western countries, the major Western countries, one of the rules they follow, even though they do spend like drunken sailors, is that they announce things way in advance. They try to keep a semblance of respectability. And what the UK Treasury did in the beginning of the year was highly unusual, and it shocked everyone, and even me, because I've been, of course, looking at these markets for many years. I worked in the city of London in the bond markets for decades, and yeah, this is surprising at the time. So, but now if you look back and you see what's happening now, you kind of makes you go, and because the UK now, for example, is planning to borrow 180 billion pounds, which is almost 30% of its GDP, in this present quarter, right? So let's get to the story. So Boris Johnson's borrowing spree has started early. Officials in charge of managing the UK's bond issuance shook debt markets from their New Year slumber on Tuesday by announcing an extra 14 billion of gilt sales in the current fiscal year. And this is the interesting part as well. Current fiscal year, it's not 2020, but which runs to the end of March. Just think about when the current situation started, right? So I'm not insinuating anything. It's up to you to decide what you think. It says the scale of the increase, which bumps up gilt issuance for the full year to 136.8 billion, clearly took investors by surprise, generating a dip in UK government bond prices at the start of the day's trading. So the fiscal year, of course, was April 19 to April 2020. That's the fiscal year in the UK. And they issued a total of 136.8 billion. It would have been 14 billion less if they hadn't done that borrowing in the beginning of the year. So now, to put it in perspective, that number, look at what they're doing this quarter. They're going to issue 180 billion. So it's more than 4 times on an annual basis. The move made the UK something of a test case. Will investors punish governments for indulging in more borrowing this year? This small example suggests not. So we gave them the green light. Just saying, a rise in UK borrowing, albeit not on this scale, had been expected given the deterioration in public finances. Spending has climbed, perhaps the result of Brexit preparations, while tax receipts have stagnated, reflecting a slowing economy. None of the new extra borrowing reflects the Prime Minister's promised investment splurge. That's suspicious as well, which will be in the budget on March 11. The Chancellor, Sajid Javid, well, he's gone now. He's not the Chancellor anymore, has already pledged tens of billions of pounds for Britain's infrastructure. Even so, Tuesday's stumble in bond prices quickly faded away. An auction later in the day attracted strong demand, and the 10-year yield steadied at about 0.78%, right in the middle of its recent range. In part, this may be down to timing. By borrowing more now, the Debt Management Office can clear a backlog before asking markets to swallow a more significant increase in 2020-21. Wow. As amazing, Pauly says, boom. So I'm not going to go over the rest of the article because it's not necessary. I think you get my meaning here. And before I look at the markets now, I just wanted to read you about another story I saw. When was this? When did it come out? Back in April 9th, beginning of April. And I only saw it once. And not many people have made a big deal out of this story. But it is kind of suspicious to me. I got it from Forbes. There are other publications who covered it. It says, report, Wimbledon's organizers set for a £141 million payout after taking out pandemic insurance. And again, I'm not insinuating anything. I just think it's very unusual that Wimbledon, the All England Lawn Tennis and Croquet Association, because that's the official name, very surprised that they did that, that they had the foresight to be paying premium on this kind of insurance since 2003. And I checked the amount of premium they paid in relationship to their earnings and revenues, annual revenues. It wasn't a big percentage. So they did well to do that. And unlike many other institutions out there, especially big corporations, they were prepared for it, and good for them. But I thought that was a little bit unusual. why didn't all the other sporting events or corporations or all kinds of other institutions prepare like Wimbledon did? I had a look at the people behind Wimbledon. Yeah, there's some well-connected people, very well-connected to the British establishment, of course. But I just thought this is another thing that makes you go, just wanted to put that out there. Very few people have been talking about this. I just wanted to bring that up along with the UK Treasury's action in the beginning of the year. So that's for you to decide what you think about these two stories. So let's look at the markets now. It's 8:40 a.m. London time. See what these markets are doing this morning. So we've got spot gold in dollars at 1704, up 6. The price of gold in pounds, which I was talking about earlier, at the beginning of the year, we're around 1190, 1192, just when the UK Treasury was doing that trial run. And it was a trial run, even the FT said it. At the time, of course, we didn't know what it was for exactly, right? But right now, the price of gold in pounds is at 1382.73, so almost 200 pounds higher. And you need to think of this not as gold going up, but as the Bank of England note or the currency in your pocket going down. This is very serious, as I've said many times. What about silver? Silver's up 5 cents at 15.54. The high's been 15.59 and the low 15.31. Dow future is down 93 points, or 1/3%, 24,120. Yesterday, of course, the market was down most of the day and then managed to recover towards the end of the day. S&P 500 is down 10, or 1/3% as well, at 29.18. I saw a chart the other day comparing, I think, bond yields to the stock market, how diverging they are. So I don't think there's a very big chance that yields are going to go back up, because the central banks, from what we've seen, they're going to keep printing money to keep interest rates down in order to keep indirectly, I'll give them that benefit, indirectly monetizing government deficits and government debt. So, but who knows? Maybe the markets have other ideas. But even if yields were to go up to meet the stock market, I don't think it would be a healthy move up in yields. And why do I say healthy? Well, because sometimes yields can move up because the economy is picking up. So the stock market might not really correct. But now we know the economies are not going to pick up anytime soon and are probably going to be worse than people are forecasting, in my opinion. So the NASDAQ 100 future, the NASDAQ has been doing well, of course. I saw someone note that the value of the NASDAQ composite is now higher than the value of all the world's stock market without the US combined, which is crazy. So the NASDAQ this morning is down slightly, not that much. The currencies are fairly steady. The fiat currencies, sterling is at 123.30, unchanged. The euro is at 108.11, unchanged as well. And the dollar is down slightly against the yen at 107.56. Crude oil is quite steady. WTI is up 40 cents at 25.40. And to finish off, the 10-year yield is now stuck around 0.7, just like yesterday morning. It is down on the day about 2 basis points. On the downside, the key yield is going to be 0.6 at the moment, it seems. Of course, the all-time low we had earlier this year was around 0.3. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.